Excel accounting practice problem. Sales receipt, payment received at point of sale. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter transactions into it. If you have access to it, there's going to be two tabs on down below. We got the example tab and the practice tab. The practice tab starting out where the prior video left off. The example tab, in essence, being an answer key. Let's take a look at it now. Recording transactions related to a sale where we get paid at the same point in time. You can consider this or imagine a sale that happens where you're at basically the check register at that point in time. The check register often recording the thing that the customer will see, the sales price and so on, but not recording the other half of the transaction if you have a perpetual inventory system in place, such as the decrease in the inventory related cost of goods sold. So those are the things that we want to be aware of in a system of like a QuickBooks system or accounting software. Then you'd have to set up those items. Those items would be the things that would make the data input easy so that you can record the transaction at the point of sale at something like a cash register, and then the system can then easily do the somewhat complex transaction behind it. So let's go back to the practice tab and take a look at it. We're going to start off by cleaning up our worksheet. Notice that we don't have much room over here, so I'm going to add another set of blue columns that we can work in on a clean set. We're going to work on a clean set. So I'm going to try to copy these cells and make another set of journal entries over here. So I'm going to put my cursor on skinny J column, skinny J, and we're going to copy over to N, skinny J to N. We're going to right click and copy that, right click and copy, and I'm going to put that on skinny O. I think that's an O. And I'm going to right click on skinny O and not paste it, but insert the copied cells. Insert those copied cells. There we have it. I'm going to clean this up. So we got just some blank blue. I just want blank blue right here. So I'm going to format it first because I don't want these indentations to mess us up as we do enter down below. So I'm going to go to the Home tab, the paintbrush, and we're paintbrushing this down. Not just because it's blue, it's already blue, but for the formatting's sake. We're doing it for formatting's sake. And then we can delete it. And then we can delete this. And then we can hide all the stuff to the left at skinny O, putting our cursor on skinny O and dragging all the way over to A, skinny O to A to skinny O. Right click and hide all that stuff. Hide that stuff. It's important, but I don't want to see it right now. And then we're going to go over and clean up our trial balance. We're going to take these ending balances and make those our beginning balances. So we got our worksheet here showing just what we're working on at this time. Copying the ending balances, pasting them over here, 1, 2, 3, values only, deleting the stuff in the middle. So now we got a worksheet that we can just show what's happening at this time, but the general ledger giving us the detail for the whole month that we have been working on. Okay, so let's do this then. Let's do the transaction over here. This is going to be on, we're going to say 119. Now, the general transaction will look a lot like an invoice, and we're going to imagine first that we sell inventory items, except for the fact that we're going to get paid at the point in time. So it's going to be similar to what we saw before, where we're working with that undeposited funds, because as we get paid, and this is especially true if you're at a cash register, then you can't really put the money directly into the checking account because you're going to have to group that money in some way. You're getting paid with cash or credit cards or something. And that means that you want to group the receipts into a clearing account of undeposited funds typically, so that then you can go to the bank and deposit them in one group setting, or you can deposit the credit cards and you can record the transfer from your undeposited funds to the checking account in the same grouping as they will appear on the bank statement, making the bank reconciliation comparison between our books and the bank's books as easy as possible. So we're going to start off with undeposited funds. So we're going to get then money, go into undeposited funds instead of accounts receivable. The rest of it will look a lot like the invoice. So I'm just going to add the accounts right now. We know that sales tax is going to be impacted if we sell inventory, because we're going to deal with sales tax on inventory sales. And this is in the United States. That's what we do in the United States. So it's a usage tax. So remember, there's no new tax under the sun. It's just how the government that you happen to be, working with wants to tax you. Right? So it's going to be it. So then we're going to say that We also have the cost of goods sold that we're going to be dealing with because we're selling inventory, and the sales that we're going to be dealing with as well. So those are the accounts that are affected. I'm going to indent the credits. So these two will be credits typically, and this one will be a credit down below. That's what we have. Now I'm going to construct this from the bottom up, meaning I'm going to first think about the inventory we sell. These are the items that you don't actually see if you were to scan something like at the grocery store or something like that. You don't see these amounts, but that's kind of like the building block, the starting point, the thing that we need to track, the thing we need the subsidiary ledger for, on which the sales price is typically going to be based with some kind of markup. So let's go all the way to our subledger to the right and consider what stuff we're selling over here in terms of, we sell guitars that are in these are the guitar nicknames. So we're going to sell an Epiphone Les Paul, an ELP. Now notice we don't have enough space down here, so that's going to be a problem. And so we're going to have to add more space. That's kind of a pain. So let's do that. Let's add some more space. So what I'm going to do is I'm going to try to make this somewhat even and add enough space that we're going to need. So let's add this whole. So I'm going to take my cursor from BZ14 and I'm going to go all the way over to the end here and then scroll down. And so let's go one more down, like right there. And then I'm going to right click on those areas and insert, and this will push them down. This would be just like dragging them down. And I want to move them down because there's nothing below them that won't mess anything else up, and insert. So now I've got more room up top. And then I'm just going to take this whole thing and copy it down, which is going to cause us a problem with our little check figure up here, but that's okay. We'll deal with that later. Or maybe I'll just do it to this one account one at a time. Let's do it just one at a time. So what we'll do is I'll format paint this one, or let's just highlight that one and then just drag it down. So I'll just drag it down like so. And so there we have it. So there we have it. That looks good. But now this cell is being represented up here. This cell CI11 is going to be in here. If I go to, it should be in here somewhere. CI11, or maybe it's CI12, is it? It's picking up CI12. CI12, I don't want it to be CI12 anymore. I want it to go all the way down to the bottom, which is going to be this one. We want that one. And that should keep us in balance here. It doesn't. What did I do wrong? Hold on a second. Undo it. Stop that one. So now I'm hitting these little icons. So I'm picking up that one. It's CI12. CI12. So if I go back up here, let's do it up here this time. Oh, it's the first one, of course. It's the first one. CI12. And right there, CI. I see now. CI. I see CI now. Okay, so there we have it. So now we're going to say that we're going to sell some of these. And this is going to be, we're going to sell 119. We're going to sell how many of these? 3 of these. Tab. They cost $400. 3 times 400 means cost of goods sold is going to be 1,200. Ending inventory is going to go down by 3 units times the 400. This is 3 times 400 or 1,200. We had 58 units minus the 3 units means we're now going to have 55 units at 400. And that means that we have then 55 times 400 or $22,000 worth left in ending inventory after the sale takes place. So then we're also, and notice it doesn't matter what flow assumption we're using, LIFO, FIFO, weighted average, because we're not doing, because we didn't have any change in the cost. Okay, so then let's do it over here. So we also sold a GSB, which is this one, a GSB. Where's the GSB? Found it. I got distracted. It's in DJ7. So we're on 119, and we're going to say that we sold 1 of these. They cost $598. That's the cost, not the sales price. 1 times 598 is that. Pulling it over to the ending inventory, multiplying that out. So we had 10, we sold 1. 10 minus 1 is 9. They all cost $598. So if we take the 9 times the 598, we're now at the 5382. So now our cost of goods sold then is going to be that 598 and this amount that we sold, the 12,000, I'm holding control down to see it there, 1798, which should match what we're out of balance by on the trial balance, 1,798. So now let's go record this on the trustee trial, on the general ledger and the trial balance in our general journal, which would mirror what we would see kind of like in a sales receipt form if it was in accounting software like a QuickBooks or something like that. So I'm going to start at the bottom. I'm going to say cost of goods sold. I'm going to say this equals. I'm going to go all the way to the right to pick it up. You could just type this one in if you would like to, but I'm going to pick it up so we can see where these numbers are coming from, and which is kind of good practice. We're going to be picking up, it's going to be that 1,200 right there, just like we said, and the other one that we just made was over here. If I could find it again, because I had trouble last time. Found it, no problem. And 598, I've got a mind memory like a map, steel map trap. There's a steel map trap in my head. So there it is. So there it is. And then we've got the other side is going to go to sales. Now the sales is not really tied to the subledger. It's going to be dependent on what we sell it for, but we might use the cost to kind of mark up. So I'm going to do it this way. I'm going to say negative and then brackets to flip the sign, 500 times 3. So one of those guitars we sold for 500 plus the other one we're selling for 777, which might be like a 30% markup or something like that, but I didn't make it exact for all the guitars, so we're going to assume those are the two sales prices. And then we got the sales tax, which we're going to assume for our practice problem, a generic 5% will be the sales tax. It'll change from state and locale in California. We're just going to assume for the practice problem 5%. So if the sales price is $2,277 times 0.05 for the sales tax payable, and then if we add those two up, that's what we're going to get. And so we're going to use the trustee plug formula is what I call it. Negative SUM, the negative sum of those items. There's our debit of the 2391. There could be rounding involved here. So there it is. So there we have it. So let's go ahead and post it. I think we got all the accounts we need. We don't have to add any accounts or anything. So this is going to be E to the Z. Easy as 1, 2, 3, E to the Z. So we're going to say W5 is going to be that 2391. So it goes up from the 20,500. We're holding on to cash to the 22,891. We've got then the sales tax down here at the liability that we're going to have to pay to the government at some point in the future. So we're going to pick that up at the 114. 114, the 392 plus the 114 to the 505. The sales then on down below. Sales down below, we're in W17. It's going to be equal to picking up the sales at the 2277. 2277 takes the sales up from the 7830 up by the 2277 to the 10107. That's an increase, not a decrease, because we're in the credit direction. It brings net income up from 1566 up by the 2277 to 3843. But then we've got the cost of goods sold. The expense related to the guitars we sold, which are inventory, is going to be equal to the 1798. So now the net income went up only by the 479. The difference between the 2277 and the 1798, the sales minus the cost of goods sold. And so then we also have then and notice I recorded this incorrectly. It should be inventory, obviously. This should be inventory. Decrease in the inventory. Apologize for that. And then we're going to record this to inventory. This is going to be equal to the 1798. So it goes from 40,676 down by 1798 to 38,878. So now we can post this to the general ledger, starting with the undeposited funds. That's going to be the second account here, undeposited funds. There it is. So on 119, we are in cell AE is going to be equal to that 2391. So now we've got the 20,500 up by the 2391 to the 22,891. Then we've got the sales tax payable, which is going to be down here. It's going to be the last liability account, same in the general ledger. Scrolling over to the GL, last liability account. We're in AX7. We got the 119. We're in AY7 equals left to the wall. And we're going to pick up then the sales tax payable of the 114. bring in the 392 up by the 114 to the 505. That 505 should match what's on the trusty TB. As it does, we're going to be out of balance still on the general ledger. Then we'll be back in balance when we record, hopefully, the sales, which is going to be our first income statement account down here. Same on the general ledger. Scrolling all the way to the right to find it, we're going to be looking at the sales. We're looking at our sales in BF77. That's right. Sales is our BFF account. So this is going to be 119. And this is going to be on BG7 equals left to the wall. We will be picking up the sales of the 2277. So that brings us up. Notice the sales always goes up. Sales generally goes up all the time until we close it out at the end of the period. 7830 up in the credit direction by 2277 to 10107. That 10107 matches what's on the trial balance, or at least it should. So there we have that. We're in balance now, although our income statement doesn't match from the general ledger to the trial balance until we record the second journal entry, which is cost of goods sold. That's going to be our second income account. So we're going to go all the way to the right. It's the same for the GL, assets in green, liabilities in orange, the equity blue, sales, and cost of goods sold. We're in 119, and cell BG19 equals left to the wall. And then scrolling back up, we're looking at that cost of the goods that are sold. In our case, guitars. The 6264 plus the 1798 brings us up to the 8062. That 8062 should match what's on the trusty T to the B. There it is, and we're out of balance by the 1798 until we record the other side to inventory. That's the fourth account on the trial balance. Same in the GL. If we set everything up the way it's supposed to be set up, which we did, AI22 equals left to the wall. Scrolling up, we're picking up that 1798. So we go from 40,676 down by 1798 to the 38,878. That 38,878 matches what's on the trusty TB. We're back in balance on the general ledger, and our general ledger income accounts tie out to the income accounts that are down here by that green zero as well. Now let's take a look at the subledger. So the subledger, and see if that ties out. It should be at the 38,878. All the way to the right for inventory. We should be back in balance over here. Back in the balance. There it is. So the 38,878. We're back in the balance. Back in the balance with the green zero. So now we'll do it again. This time we'll just have a service, like say we did a service item at the point in sale. We got paid at the same point in time. For example, you know, the guitar came in, we tuned the guitar or something like that at the same point in time. And so we don't have any inventory involved. And oftentimes in the United States, if you don't have inventory involved, you don't have sales tax on the state and local side of things that you have to deal with as well, a usage tax. So that would be a much more straightforward transaction. We're going to still put that right into the undeposited funds that we are receiving, because we're receiving it at the same point in time. We're going to imagine it was for 15180. The amount there would have to be in an accounting software, still be something you have to set up by items, because you would like then the data input to be as easy as possible for someone that doesn't really know the billing process or whatnot, to be able to enter the data input into the system as easily as possible. And then we're going to have the income account, which we don't really want to put the sales, because sales really represents generally sales for inventory items. So we want another income account. I want another income account. So we're going to have to add another income account. So I'm going to put that above the cost of goods sold. We're going to select these four cells, right click on them and insert, and push those cells down. So there we have it. And we're going to call this one a service revenue. And we'll put a 0 to start here. We'll sum it up for our formula. And there we have it. So now that's going to be our service revenue. And so we'll just pick that up. There's our credit. And so then we're going to have the debit and the credit. Let's post it out. So we've got the undeposited funds up top. That's in W5 F2 plus F2, picking up that 5180. So now we have undeposited funds at 2871. We're going to have to put into the checking account at some point, and then the service revenue, which will be on down below in W18 equals. We will then pick up that 5180, bringing it to 5180, putting us back in balance, increasing the net income to, this is income, not a loss, 7225. There's no cost of goods sold related to, of course, the service revenue because we didn't sell any inventory. Let's post it to the general ledger, undeposited funds, second account on the trial balance, second account on the GL. We're going to say this happened on 119 in AD9 in AE9 equals left to the wall 5180. So it goes from 22891 up by 5180 to 28071. Then we're going to be adding the service revenue. So that's going to be at the very end. We will have to add that service revenue. So that'll be fun. Let's do that. That's good times. The times there are good. They are good. So we're going to have to add more to the right here. So I'm going to be putting my cursor on skinny, whatever that skinny is, on the skinny, over to the BH, right click and copy. And then we're going to put it, we're going to insert it right into this skinny column right there. Right click, right, if you can, and insert the copied cells. And so I'm going to delete the name for now, delete the activity for now. The starting point should be 0. And then delete this, and the starting point should be 0. So then the thing is, I want it should be the next one, down below here. So I really want to put it down here and move this one like up here. So what I'm going to do is I'm going to copy this one. I can move it, I could drag it, but it's the same as cutting it. So I'm going to cut it. And I want to put that one like right there and then paste it. That's where that one should go. And then I want this one over here. So then we'll take this one and then cut it, cut that, cut it out and put it right there. So that looks good. And this is going to be our second revenue account then. So this will be equal to, scrolling to the left, we got a hole in the GL teeth. That's okay. And so this is going to be the service revenue. That looks good. This happened then on 119, and then in BG17 equals left to the wall, picking up that service revenue, the 5180, and enter. So we go from 0 up by 5180 to 5180. Now that amount also needs to be added to our general ledger check number. So the GL check right there, it's got to be added there and to both these check numbers. So I'm going to double click on it, go to the end of it, this super long formula, and add that number there. Add the number there. So that's going to be this one. That's the missing one. That should put us back in the B, back in the balance again. And then this one is that. So then we had this one's needs to be added here too. So I'm going to add it to the end of this one, plus, because it's an income statement account. So we're going to add it to that one just to give us a double check, tying the income statement accounts out to the trial balance. So these are just the income statement accounts that we're matching to the trial balance. So that's a green 0 because those accounts 7225, meaning sales, the sales revenue and the cost of goods sold match on the GL and the income statement. So there we have that. And I think that's everything. I think that's everything on the sales receipt.